TGIF Warriors, risk off. Can you spell it? Will the market get another graveyard save like last Friday? I don't think so. How you doing, team? How you doing, Mike?
Morning,
Steve?
Dale.
How are you,
Yeah.
Stel?
IT.
Ryan, how are you? K-Man, how are you? Bran, how are you? I'm the Pied Piper of interviews. Okay. Fred Field the third. Are you new here, buddy?
Yeah, we got rid of the other two.
You got boy, you are fast, man. You are really quick, Ryan. You know, the business hasn't burned out your brain cells yet. Let's Rob Adland, I haven't seen your name before too. Who did we get rid of so Rob could be here today, right? Anyway, Kurt, how are you? Ingmar, you better be ready. That's right. All right. Okay, so everyone's doing okay. Hope everyone had a decent week. Don't try and make your week on a Friday, right, team?
Yep. Friday's pips is beer pips.
Okay, beer pips for Ryan. I believe that. So, let's take a look around. Uh, so here we go. So the narrative that came in reinforced weaker dollar, risk off. Euro had a great week. I don't see it doing anything wrong here. Uh, I think there's a shot for 118 if the Dixie goes to 98, which Dixie doesn't look too good. But enough of what I think. Let's start off with Stel. Uh, uh, I know that
Good
you want to
morning.
talk about
Yep.
maybe silver's double top, gold failing rally. So it probably looked like, a few days ago that you shouldn't have gotten out, but your patience is going to pay off for you to get better levels. So
Let's
here,
let's see. Yeah.
yeah, let's look at
Let me take
what
the
we.
screen. I'm gonna start by saying something a bit
Okay,
more. How should I say it? A bit more forest from the trees. So
okay.
usually I'm gonna
You're
start
you're
with
Luke. You're Luke. You're Stelios Groman.
Taylor's grown. Yeah, Luke's good. I like Luke. I like him a lot.
That's his
We're
thing.
both bold, aren't we?
Yeah. Oh, yeah, that's right. Are your brothers. All
So
right.
what people usually say, and I think it's right, is that rates and interest rates and yields lead most of the other markets most of the time. And I think that's the case because, when rates are low, it's easier to lend. It's people take more risk. It's easier to borrow. Sorry, people take more risk, and you see assets moving one way. And then when rates are tight, then it becomes a lot harder. And you usually see with high rates, you see equities having difficulties, etc. But there comes a time, and I think we're at this stage now, when another asset class is the driver. And I think that equities at the moment are leading the way. And in what way are they doing that? I think we are, and we have been quite overvalued in terms of every metric that you could think about. And you have a handful of companies, all of them tech companies, obviously, doing this circular financing, which makes it look like there's deals happening and money flowing and profits here and there, but really it's just Nvidia lending to OpenAI, who then goes over and makes an order on Nvidia and on Oracle, and then Oracle does it. It's like
Yeah.
a circular thing, which makes no sense. But um, to
It
cut
kept
along
prices pumped.
yeah, to cut a long story short, prices have been high, valuations have been very high. I mean, look at some of the ratios of these companies, ridiculous, like Palantir and Nvidia as well. Even though it's a $4.5 trillion company, I mean, the ratios are very high. So I think at some point, markets realizing, is it now? It could be that hey, we might have gone a bit over the top here, just like in 99 2000, the dot-com craze. Um, Maybe we've gone a bit too far and we need to correct. And I think this is what we're going to see. Is this the beginning of it? It could be. And as stocks fall, then you obviously see safe haven flows into bonds. So you see yields dropping, apart from the UK, which is a different story. But also, you see risk assets fall, you see cryptos fall, which are correlated, times three with equities. And also, I've said this before, when things start to go bad, everything gets sold, even theoretical or even practical safe haven assets like gold. And gold in the long run is going to be a safe haven asset, but when the poop hits the fan, people sell anything they can sell. So you see gold coming down, silver, platinum, all those metals. You see equities going down. And having said all that, we're only 3.5% off all-time highs in the S&P, so it's no need to panic yet. But if we drop below 65.30, which is these lows down here, then this starts to get serious. And before people say, "Oh, it's going to be a generational buying opportunity, buy the dip at 200 points lower than here," just scroll back a little bit and look at what equities or the S&P has done over the past, post-COVID. It's been a hell of a run. And if you look at it technically, really the first proper solid support is around 4,800. I know it's a million miles away from here, but it cannot be ruled out. And anything can happen, especially when panic selling comes in. And also, given that it's been such a run that we've gone from 4,800 in April to almost 7,000. There's been lots of people making lots of money on all these stocks. So when they start going, which they already have in a way, it's just going to be sell wherever the market is and get me out. So, but let's take it one step at a time. This is just the beginning, I think, of what might happen. I'm going to be convinced below 65.30. Obviously, there are some levels of support here and there, but it's going to start looking like we might get a proper risk of, dare I say it, bear market in equities. And if that
You're,
happens, yep,
yeah.
go on.
Oh, I was just going to say, Stel, that 38%, you're moving the average, and the
Yep.
prior all-time high all comes in at that 6140 level.
Yes. So that's going to be a very, very important level. And if we get there, we're most likely going to see some kind of reaction. If we don't, it's going to be very, very bad news. But yeah, very well spotted, actually. And also, if you look at the DAX, I mean, the DAX is looking a lot trickier. For the DAX is about 300 points away from the trapdoor being open, basically, and then who knows where we go next. So equity is looking quite shaky. Are we going to get a Friday stick save? I don't know, but for the moment
Okay.
it is risk off, and when that happens, we get, first of all, yields dropping. 10-year is still going sideways in the last month or so, but in the grand scheme of things, I still think we're going to be going lower. And I think the Fed is going to be taking rates lower. And I also think that we're a lot closer to some kind of QE, even though they won't call it QE. We're a lot closer than the market thinks. And the same applies for gilts as well. People talk about the UK and the budget coming up, and the government now doing a U-turns, and there's rumors that they're not going to be hiking taxes because that's going to break promises they made before the election. So they're going to do different things, and yields are rising in the UK. But I think we should have no doubt that the government, the central banks, are going to step in and buy whatever needs to get bought to keep yields low, because the governments cannot withstand high yields for a long time. We know that. So just a word of caution for people who think that yields are going to be going to 7%. I really, really don't think so.
Well,
Even
can I ask you something, Stella?
yes,
Yesterday was the last 2 days were pretty good sell-offs, and there was no flight to quality in TLT, and yields really didn't drop during risk off. So it's really going to take a lot of risk off probably to get yields to drop because
Yes.
I haven't seen any flow. If you look at bonds like TLT, I know you
Yep.
own a
I
TLT
still
did.
have it. Yeah, I still have it for a bit. Yeah.
Yeah, see, I mean, look at what TLT did during that
Yeah.
sell-off.
I
Yeah.
think you're
Nothing.
absolutely
Hi
right.
guys. Hi guys.
Hey,
Can I just say something?
yes.
My opinion, and I still stick to it, is that the asset managers, the money managers who give the impulse for moves on bonds, they did not have data to stick into their models for the
Oh,
past month and a half. And once they will have those data, which should be starting next week, I expect the bond market to start moving again because they will get new impulses in their portfolios. For the time being, they have no data to change, and we all know that it's models being driving the portfolios now, right? I mean, there's very few individuals, portfolio managers who take big bond positions without being supported by their models. So I think from next week we should be starting to see bond moves again when they will have data. Hopefully, the September and October jobs data.
Good point. Very good point. Yeah. Yeah. Well, let's see. But you're right, Dale. We've only moved a little bit, and I think also it's because yes, we are seeing risk off, but it's not. It was still, like I said before, 3.5% off all-time high. So it's not a convincing move yet. When things start really moving, I think we're going to see lots of inflows into bonds. But as Kay said, let's see when we get the data and then see what happens. The other thing I want to talk about is Bitcoin and Ethereum because they are correlated with risk. Well, they have been recently. And as soon I had been talking in the chat room about the 100K, big sentimental level, but also big technical level. And as soon as it broke, I changed my, excuse me, my bias to bearish. And I think as long as we're below 100K, it will remain firmly so. We're at the 61.8 of this move, so might be seeing some kind of support here, but it's looking very, very ugly for cryptos, and a similar situation for Ethereum, testing the previous lows from earlier this month. And again, I mean, I really think we're going to be testing this. Well, this trend line is probably not as important now, but so I'm going to get rid of it. But next level, probably the 61.8, so 2750-ish. But looking pretty bad for cryptos, and it's not looking good for metals either, although they are a lot closer to their all-time highs. Gold is turning around today, same with silver and platinum. I still think that metals will not be excluded from the selling, and I think they're going to be moving a little bit further below this 38.2, just below 3970-ish is going to be the next level. We have the 50 DMA moving towards that level as well, so that's the next level of interest. But I think it's likely we might even break below that. So patience required. I'm still looking to get long metals, especially silver and platinum. Gold less so because of the ratios, which are still high. Gold, silver still at 80. I know it's been over 100, but still it's pretty elevated. And so silver is looking like it's making a really nice double top. And I think, did we get a new all-time high yesterday?
No,
Just marginally? We
No.
missed
didn't.
it. Missed it
Missed it.
by
Okay.
what? By a dime, I think,
By a
right,
dime.
P-Man?
Well,
Yeah.
yeah. So I'm waiting for this definitely, and I will stick to my guns, and I'm waiting for somewhere between 41 and 42, 41 and a half, 42. Obviously, I'm going to be watching for price action. I know it's a long way from here, but crazier things have happened, especially in the silver market, and so I'm not touching them, and I'm still waiting for them to drop further. Platinum is underperforming yet again, and
Hey,
sorry.
Stelios, that
Yes.
platinum is the first metal on every correction in the metals to go.
Yes.
I've been watching this, and every time that gold, silver as well have been correcting, platinum started the fun every single time in the past corrections.
Wow, interesting. Yeah. Okay.
Yeah.
So platinum is one of my favorites because I look at the platinum to silver ratio as well, just as a an indication. I mean, look what it's done over the past 15 years. Very, very obviously platinum has had trouble because it's mainly used in catalytic converters in cars, and we all know that in 10 years time there's only going to be electric cars. I'm kidding, of course, it's not going to be like that, but that's what the market thinks. So platinum has been underperforming massively for a long time, and this is one I'm definitely looking at. And my area of interest is probably around the low 1300s for platinum to start getting long, but lots of patience required. It will depend on equities as well. And last thing I want to show is the dollar. I still think we're going to see dollar strength, and this is usually what happens when we get risk off. We do get inflows into the dollar. I mean, this is just 9 times out of 10 we see this. So I think that we are going to see strength in the dollar. We're going to test 101, maybe 102. I don't know exactly, but we'll see how it goes. But I'm going to be looking to buy dollar dips for sure.
Where at? 98?
98 is not a bad level. Yeah, 98. Yeah,
Okay.
I'm gonna try and pick which currencies I want. I will not be buying dollars against Norway or Mexico, but I will be looking at euro, pound, yeah, maybe even the yen. I don't know. We'll see. The yen, I'm not very comfortable with, but the euro dollar and the cable are the ones I'm going to be looking at. And that's it. Actually, no, oil as well. Still looking weak because it's below this huge zone that we broke below, and we're retesting again. And what happens when we get risk off to oil? Well, it goes lower usually. So I would be very, very careful if I was long oil here. I know it's up 2% today, but it's been very volatile on a daily basis. And just to show the difference, nat gas has been doing quite well in the past few weeks. We're getting into the winter now, etc. So interesting divergence between the two. I don't trade it, but just something I was looking at the other day. Yeah, that's pretty much it from me. I don't know if anybody else wants to take over. And
I'll take over.
I'll pass the screen over.
All right. Thank you, Stel.
Thank
Some
you.
nice looks. The community was tuned into Nat Gas a couple months ago and updated about that. That's been one of the best trades of the quarter. So let's
Nice.
see. Now let's go and talk a little bit, talk currencies, and start off with Ryan. So Ryan, looks like the yen is, the reason. It looks like risk off is a bigger reason for movement in yen than the new prime minister.
Yeah, at the moment, yeah, what's going on in the dollar? It's swings and roundabouts at the moment, but the dollar's still under the cosh a bit, in a similar vein of form, I think, to what Kay's mentioned about the bond market. FX isn't waiting around for the potential to see some bad data coming, and yeah, it's taking a bit of a bashing at the moment.
What kind of week is it?
lift.
Let's see if it's still a little bit higher on the week, 2 week
Yeah,
reversal.
it's had a pretty quiet week, all being
Yeah.
told, compared
Yeah.
to prior weeks so far. I mean, don't want to give it the kiss of death. But yeah, there's probably going to be a few people jumping. Oh, is there been a phone around, and is it the Bank of Japan?
Yeah.
Making contacts. I don't think so. We'd probably see a bigger move than that if it was.
Euro
Yeah,
pound's still kicking for you.
yeah, still holding up there. Still holding up there. But we might tentatively be close to a temporary top, barring any news based on what happened this morning in the UK, which
Okay.
sent the
That was a
pound
great.
every which way.
Yeah, this was a good lifestyle trade for you.
Yeah, it was. Been in it since July, and yeah, it's still going. I'm not ready to chuck it in the bin yet.
There's an interesting candle on a weekly basis, and this has been a huge move. Maybe we're going to get a pretty good correction on this. This has been a runner for 800 pips or so. So you're looking to buy breaks on this. It was good to you when you took it to the dance over the last couple months, you think you might go out with her again?
Well,
My
she's been
dating trading metaphor.
well, she's been a bit two-faced. She was nice to me. She was nice to me earlier this year, and then she stamped on my toes
Did
while dancing the last couple of
oh,
months. I was shorting
yeah,
it up in the 110s, 111s, 112s,
yeah.
but it just kept going. I think we have the potential for a more solid top to be in now, up around that 115, 90, 116 level, if it can even get back up there.
Okay.
Um,
Yeah.
but
So you're in a sell rally mode now if we pop.
yeah, I was looking at this yesterday after we broke back under that 116, and it was trading 115, 70s, 80s, and I was like, shall I just wait for a little tap of the level up there and then get a little short on? I didn't, and here we are,
Okay.
110 pips lower. So yeah, I think potentially this has moved into rally sell mode, but yeah, I'll wait till I see some confirmation with resistance levels getting tapped and holding first.
Okay, how about the commodity currencies? I noticed yesterday when euro and cable were strong, Aussie wasn't. It's coming back here today. And then also in Canada, you had this little wedge thing that we talked about before the end of the show that looked like it could pop out of here. I look at the daily in Canada and it's almost like it's incomplete, that we could get one more high out of Canada, kind of a 1, 2, 3, or do you think it's had it and we're on our way down?
I think it's got to push up. If we
One,
can't get above 140.40 and hold it, then it stays bearish at least in the short term for me.
okay, that's a great level Ryan just laid out for you guys. Okay, thank you, bro.
Thanks, mate.
And be careful with who you go out with, especially since you're married. Okay. So I was speaking from experience. So
Make sure it's dark.
yeah. All right. Thank you, buddy. And good morning, K-Man. How are you?
Morning, Dale, and everybody.
Yeah, you noticed early in the day yesterday how silver came off from
Mm,
its high early in the day pretty
yeah, yeah,
rapidly.
yeah,
Like it took a buck out of it right away.
yeah.
So where are your resting buy orders in silver?
I have not right now because on stuff that volatile, because we lost $3 in the meantime. On stuff that volatile, I'd rather wait for the start of next week to get back into something, unless we do something really stupid and drop to 48, 45 or so. I mean, over the day, because it's really going very fast, and gold as well. Um, Gold, we need to watch what's happening around 4,000 again, since that's where we opened the week. And yeah, silver. Yeah, as I said, I mean, it's those are those kind of things. It's hard to catch an eye for me, at least on a Friday, because you never know
Yeah.
how the market wants to go into the weekend. But yeah, but if we get something stupid down to 45, I won't be able to hold back. For the rest, yeah, you were speaking about Aussie. That was the theme also yesterday, where we had those really good Aussie data, right? And
Yeah.
Aussie dollar went up, and then and the Aussie together with Norwegian kroner have been the two currencies in FX who have been the most sensitive to risk. And Aussie really, well, actually now it's recovering, but went for a stop run there under 65.15, which was the low of the week. But it's recovering now. But yeah, I mean, it's very sensitive to risk, that Aussie dollar. So I'm a bit cautious with it. But if we stop going down in equity markets, it's one that is still on my shopping list to get long again. For the rest, I'm not. Well, I'm long Euro sterling like Ryan, but interesting move happening on the yen, finally shying away. Also risk driven, obviously, but that's going to be maybe, just maybe, if we can add some more to the downside, maybe give an opportunity to look at euro yen once more. I would have loved euro yen to come down more together with dollar yen, but that seems to really hold up. That's one that I still haven't given up in the longer term, because Japanese government keeps reaffirming that they are going to spend a ton of money. So I think every yen rally, maybe for a couple of sessions or so, may again be short-lived. This one is on a support for me, Dale. I've got a trend line.
Are we going to get a graveyard save like we had last Friday, where everyone just goes,
Yeah.
you,
If you go to August,
Bailey?
I believe,
That channel that
the
gave you the
blue
low
line,
last Friday.
the blue line from August. I think yours is a bit steep there, but if you adjust the one that starts in August on the downside there, yeah, on the bottom end, on the low in August there, no, bit to the right, bit to the right,
This one?
bit up, this one, and then you adjust your line there to go over the next low. Yeah, there we go. And just extend it to where we are. We are very close. 66.5 is my level.
Yeah, it
It goes
worked.
below 60,
Yeah,
goes
it held it like a
66.5.
champ. Yeah,
Yeah, it held like a champ,
yeah.
because it held right after as well that big red candle there, the spike after also
Yes.
held the trend line, so it's already a 3-point trend line, so that's okay.
1, 2, 3,
Yeah,
4. Yeah.
66.5 is really my level. If it drops below, we could see a bit more of a massacre to end the week. But then I don't think we should be short unless, as Stel said, it drops below 6,500. But is it really necessary to drop below there? Is my question.
Well, been negative Bitcoin. Let's see if we're getting divergences on this Bitcoin. Not really.
Yeah.
By the
So
way, look at the chart for MicroStrategy, because we know this probably
yeah,
one of the biggest
the
whales of Bitcoin. They've
yeah,
just broken.
Chanos.
Yeah,
That's
no,
Chanos's big short.
oh, is it okay? Well, they've
Yeah,
broken below huge support, and I think they're going to be one of Bitcoin's big problems. Look at
yeah.
that. I mean, they broke below the 25 lows. Yeah, looks ugly.
Michael
Apparently, he's just
Saylor,
sold a billion in
Talking
Bitcoin.
who did
talking
who?
about big shorts. Have you seen that Michael Burry closed his fund?
Yeah, yeah,
Uh,
true.
and he
He
was short
closes.
Nvidia, right?
Yeah, and he closed his fund or closed his positions.
Closed
Close this
his
fund.
fund. His fund. He closed it. He says he can't. He says he doesn't understand today's valuations.
Oh, so he's not short Nvidia. So he got hurt, huh? I don't get it.
I guess.
Well,
Yeah. I guess he bought puts and they exploded in his face.
Buying puts in Nvidia should have been a home run ball.
Nah.
Yeah, I guess it depends where he did
Yeah.
it.
Well. Okay. We don't know where the fund else had positions or so, but
Wow, that's a
anyway, he said
shocker.
he closed it because he doesn't understand the markets right now. He's
Well,
not in sync with markets. He called it.
he's not alone. I don't understand them either.
you know, look at this.
You should come and join the chat room then, still. We
Yeah,
understand them.
we start taking out this 181. It measures down to about 145, back down to here. So we'll see. That's an interesting thing, though. I thought he was cleaning up. And maybe he was early. That's the only thing I could, he was bearish Nvidia maybe here and he got wiped out. I don't know. Anyway, all we can do is control our own accounts. It's very interesting information on that, but the semiconductors. Look, here's Broadcom. It's already taken out the low from last week. So, okay. I think we've
We have some
covered.
Canadian data, I think, today, do we? In a few
I,
seconds.
okay, I do have Pedro is
Oh,
supposed to be
Pedro. I
here.
love Pedro.
Let
He's
me see if
great.
he's around, and someone's going to have to help me
I will do it if he's there. Hold on.
promote him.
I don't see him under P.
Did we put out a tweet about him?
Yes.
Okay, there he is.
Where? Oh, there
Abracadabra.
he is. I'm gonna promote him to
Okay.
panelist. I really like Pedro. He's one of the people who asks the difficult questions, you know, in the presses and stuff. I like him a lot.
Okay, so we've got him. All right. Well, team, thanks for another great week of providing content, actionable ideas for the community and here in Face and with the Flow Show and in the chat rooms and get some rest. I don't think it's going to be a quiet period going into year end. So have a great
Thank you,
weekend.
Dale.
Thank you,
And
Coach.
yeah, thanks,
Good
Stel.
Canadian data, by the way, if anybody cares.
Market doesn't.
Ryan cares. All right.
No,
Well,
I don't.
all
Cheers,
right. Well,
Dale.
thank you, Dream Team. Have a great weekend, everyone.
Thank you, Coach.
All right. See you, Kay. Pedro.
Hi, Dale. Good morning.
Hey, good morning, Pedro. Great to see you. What a week.
What a week.
So, why don't we start with the narrative that the market's starting to talk about? It seems like the market unraveled a little bit this week because they don't think they have the Fed behind the market in a sustained, obvious path that they're going to take, and that's shaking things up. Do you think where the market is, like say, for example, we're another 5% lower or something like that going into the meeting, would be enough for him to cut in December?
Uh, I don't think the market move has any bearing. I know that you guys
Okay.
think, I know that you guys think you're the center of the action, but honestly,
Uh,
that's like short-term market action is not a driver of Fed action. I mean, what
that's
is
why
the
they didn't
driver of
hire
Fed
him.
action is, I mean, I will say if bond markets get repriced in a really, nasty way, like if the actual pricing of Fed funds is way out of line with what the Fed thinks, as it was in October, for instance, then Powell is forced to realign sentiment. But I don't think this market move resets anything. I do think that the divisions were coming to the fore this week in the Fed speak because they're very real and because uh, there's actually very little certainty about what to do in December, and in fact, very little clarity about what's going to go on next year under new leadership. So one of the reasons for that, I spoke to Rob Kaplan, former Dallas Fed president, just
Yeah.
last night. I interviewed him, and his take was that basically it was easy to get the first one or two insurance cuts out of the way and to get agreement on that around the table. But now that you're getting closer to neutral, and that some people don't actually think, some people think you're already at neutral, basically,
I got
it's harder to get policymakers on board with another rate cut with inflation still about a percentage point above target. And so you
Okay.
do have that kind of complication of, the Fed can't really cut into this inflation without raising inflation expectations in some way. The government shutdown might have strengthened the hands of the hawks in the sense that you failed to get confirmation of any worsening of the condition of the labor market while still getting confirmation that inflation remained high. And so that kind of tilted the balance a little bit in favor of the hawks. If we, for instance, get some very nasty payrolls readings coming out of BLS ahead of the next meeting, it could be that sways the committee into doing another cut.
When do you expect this data to start flowing again, Pedro, after the
I
shutdown?
think we're going to get some clarity today about that. We're just
Okay.
trying to figure that out ourselves. But we should be getting a calendar from BLS fairly soon. And then we'll have
Okay.
some clarity. But we already know it's going to be so spotty, and there's going to be doubts about, what the effects of the shutdown were and weren't. So for instance, I think we're going to get payrolls, but we're not going to get the unemployment rate. And so we're just going to go a month without an actual jobless rate. So that's a very, very important piece of the puzzle
Yeah.
that's missing. I think we're going to
Yeah.
be missing 1 month CPI, if I'm not mistaken, but don't quote me on that. So yeah, I think One of the other things that Kaplan said I thought was interesting is that the Fed basically has two options, which is they could either do a hawkish cut in which they lower rates at the December meeting, but then signal that the bar is much higher for further action in the future.
Okay.
But the problem with that is it kind of shuts the door to additional cuts in the near term if the job market does get significantly worse. And the other option would be, which might actually get the hawks on board more easily, could be a dovish pause in which Powell says, we're watching things. We could do more
We're
if
ready to go if needed.
exactly. And so those are kind of the two options. I still would lean in the direction of them cutting. But honestly, Dale, I think this debate over December or not December that's driving the market is kind of off the mark. And I'll tell you why. We're going to get perhaps before the December meeting, but maybe after it, likely before Christmas, we're going to get an announcement on who the next Fed chair is. And
Okay.
regardless of who that is, they will have a very strong push from the executive to reform the institution in a way that I don't think that we've quite wrapped our heads around. If you think about how aggressively the Trump administration has gone after every other agency, department, cabinet, major institution in the United States, the Fed is no different. Yesterday, there was the news that, or was it yesterday or the day before? The week just gets smashed together, but that President Bostic is going to retire
Retire.
in February
Oh
when his
boy.
term is over.
Yeah.
Could have been renewed. So I don't know if I can't say that there's any politics involved in this, but that's definitely the date that people were on the lookout for potential changes at the regional Fed level. So we'll see what happens there. So it
Okay.
really depends, and that could be one of the reasons why markets have been expecting a more dovish Fed into the future. There's this big disconnect between like market expectations into next year and
Yeah.
how the Fed sees things. And I think that's in part because the market is looking past Powell and looking toward a Fed chair who's going to be working for the president, more or less.
Right. Actually, so it's going to be kind of like an Erdogan directing central bank policy. We know what happened to the lira.
Well, the thing is, I think the market believes that Scott Bessent is a sort of Trump whisperer who will talk him out of his worst instincts when it comes to central bank independence. But I do think they're going to get very creative and kind of cute in ways that we haven't thought about and probably can't think about. Because I think the way that this administration works is they put a bunch of people in a room and they say, like, come up with, anything you can and let's figure it out. And so they're very creative in pushing the limits of institutional boundaries. And so I don't think we kind of can wrap our heads around what they might try to do in terms of Treasury Fed coordination, in terms of trying to hold long-term yields down, in terms of playing with the yield curve as a policy tool. I'm just in terms of potentially trying to funnel funds into housing in some major way. I've seen a lot of ideas thrown around and I'm not sure what they have in mind, but I'm sure that it's going to surprise us in some way.
Okay. Yeah. There's a lot of talk about restructuring debt, and one of the tools might be the revaluation of gold. Some people are saying that crypto is going to be part of it. Do you know what the grand plan is from Besant here? He's kind of like in the administration, like General Milley was in his first administration, like you're saying, to, appeal to his better angels, right? So, do you have any idea, or I know you're at a conference a couple weeks ago where they were talking about Fed independence. Do you think there's a plan?
So first off, that conference was excellent. I urge everybody to check it out. It was at the Peterson Institute and it's available online at their
Yeah, I put the link out here that day when you
yeah,
gave it to me.
it's really
So,
it's really
yeah.
fantastic.
Did you speak or you were just you
No,
were a
no, I was just
listener?
watching. I
Yeah.
was watching.
Okay.
Um, but I'm sorry, what was your question again, Dale?
Well, I think the theme was
About restructuring debt
but
and what the main
yeah,
mission is, right?
yeah, yeah. What's the game plan?
Honestly, I don't I think that Scott Besson sees himself as a kind of Hamiltonian figure, and I think he's spoken about it in the past. He
Okay.
wants to oversee a giant leap forward in American economic growth. So I think he's going to do everything he can to put the economic machine of the, American economy into overdrive through manufacturing investment, AI investment. They feel that the tax bill is going to kick in at the beginning of the year and really start to have stimulatory effects, in addition to the deregulation that they're doing, opening up room for kind of M&A and more competition, even in kind of asset markets. And so I think that's how he envisions it. He thinks that deregulation is going to bring about great prosperity that takes us beyond what we see as potential, what economists see as potential growth of around 2% and aim for the 3s or 4s. I think that's the grand aim.
Okay.
And how he gets there, I think they're piecing, I think they're kind of building the plane, as they go. I think they're not quite sure how they're going to get there. But
Okay.
in terms of restructuring debt and revaluing gold, you've seen that Fed paper about that, right? Have you seen that?
No, I haven't.
There's actually a Fed board paper about gold revaluation that I'll pass your way. And it just discusses, the possibility. It's well outside of my, realm of
Yeah.
expertise, the metals are, but it's something the Fed has at least considered or discussed. That's about its own holdings, of course.
Yes.
And so, but I'm not sure what the grand plan is. I know that the big idea, let's put it this way, very unusually, Scott Bessent, the Treasury Secretary, actually spoke this week at the New York Fed's Treasury Markets Conference. As you know, the Treasury and the Fed keep their business quite separate. So it's
Yeah.
unusual to have a sitting Treasury Secretary at a Treasury Markets Conference in New York. And the title of his speech had something about the golden age of the American economy in it. It was a very kind of political, it had a lot of political overtones for a Fed a speech
Yeah.
delivered at the New York Fed. And so I think that's a hint of how he sees things. And I think maybe one way to think about it is whomever the next Fed chair is, Scott Bessent is really the next Fed chair, and he's going to be having a great role in directing and coaching that person in what to do.
Kind
And
of
so I
like
direct everybody to the piece.
James Baker was with Bush. He
Indeed.
was,
And so I would
you know,
direct everybody to a piece that he published in International Economy a few months back. It's a 10-page, very extended essay. It's almost like the foreign affairs for the international economy, to your point about James Baker. And it really lays out his vision for why the Fed has failed as an institution, has failed the country, and what he thinks needs to be done. And the reforms are fairly radical.
yeah. All right. So a brave new world we're headed into.
Yeah.
Should be some great stories and topics to cover.
I think it's gonna be really fascinating.
Yeah.
Absolutely.
So
This conference, honestly, this conference about central bank independence, what was so fascinating about it, Dale, is that for better or worse, Donald Trump forces us to kind of I think I heard Steve Leisman say this once. He stress tests every institution that he comes into contact with and
yeah,
pushes them to the limit. So here we were at the Peterson Institute having this really incredible debate about like the nature of central bank independence, how far it should go, what kind of accountability and transparency is required for a central bank to maintain that independence, what parts of the central bank's mandate should be more accountable to Congress and what parts should be actually independent, like the actual monetary function versus regulatory stuff. Really foundational stuff that we might not be thinking about if it weren't for Donald Trump. And one of the things that really struck me, there was a panel with a bunch of lawyers that was like the legal panel as opposed to the economics panels. And it really struck me how much all the stuff that we follow in markets and as a Fed watcher,
doesn't matter anymore.
no, not that it doesn't matter, but how much it's subservient to the law, how
Oh,
much the
interesting.
rule of law is actually the umbrella under which we all fall. In other words, because ultimately they were discussing how the core of Fed independence now hangs on a awkwardly phrased sentence by the Supreme Court, that carve out that says the Fed is a uniquely structured institution, the carve out in the Slaughter case, which overturned the Humphreys executor decision. And basically, that sentence, which one of the lawyers or the author of the, I think is Steve Vladeck, the author of the Shadow Docket book, he said it was a stupid sentence because basically there's no legal reason why the Fed should be special versus other institutions. And by trying to create this carve out simply to placate markets, the Supreme Court had left itself on very shaky ground, essentially. And that decision is still, hanging out there. And so the Lisa Cook case is very, very important for the future of Fed independence.
Interesting. And, I do want people to know that, want to follow you. And I think it's, to your detriment if you don't follow this particular Fed watcher. You go to MNI and then, yeah, you're under what? Under policy or?
Policy and then developed markets.
Okay.
But a lot
Okay,
of
so,
stuff is hidden
all
behind
right.
it. So
All right. Yeah, so here you go. And he also conducts, you're one of the few people that really gets to talk to a lot of ex-Fed
keep scrolling,
officials.
keep going down,
Okay.
going down a little further. It's the exclusives. Those are the ones that matter. It's all the exclusive stuff. And you
Okay.
click on it. So
What'd you get out of this systemic risks? What are the main ones?
that was a really fun interview. That was actually a podcast that I did this week with a
Yeah.
former SEC economist who also worked at the Fed, and he's studying private credit. He's looking at business
Uh-huh.
development companies. Have you heard of these BDCs?
No.
Oh man, you got to check these out. I hadn't heard of BDCs either, so I'm glad that we're on the same boat because you're a smart guy and you're a man about town. So business development companies, it turns out, represent about 10 to 15% of the private credit universe, which totals $2 trillion, which is not nothing.
No.
And they lend to small and medium-sized businesses. There's I don't know how many there are in the country, but there's well over like 200 or something. And so Samim, this economist, did some research on the interconnectedness of banks, insurance companies, and other financial type firms in times of crisis. And he compared the financial crisis episode in 2008 with the COVID crisis. And it turns out that what private credit is doing is it's ratcheting up the interconnectedness of the linkages between these assets, so which of course raises the chance of synchronized, asset price declines in times of stress. And
Right.
he
You
can
know,
find
I was
direct linkages to private credit for the creation of this interconnectedness because of the opacity of the lending that's taking place.
Yeah,
So,
we
right.
could have, it would have been enough to have just problems with the shadow banking system with credit issues and bankruptcies, but the commercial banks funded this. So what you're talking about and what the interview is addressing is that now it's really too big to fail
Yeah,
because you can't just have problems with private credit without it affecting the commercial banking system anymore.
correct. And the fear is, Adam Posen gave a very good speech about this at the Central Banking Conference. The fear is that the administration's kind of warm embrace of the crypto industry, including its direct ties to the industry in terms of business interests, potentially will use stable coins to create like a window from crypto into the regulated financial market and create some kind of too big to fail, function, some kind of money market stable coins that becomes too big to fail and thus it forces the Fed in some way to, become a backstop for the crypto market.
Wow. Okay. So there's got to be a cost. So maybe even though we're on stable coins, what it represents isn't so stable and is accelerating the depreciation of the dollar.
I mean, when you just look at
What do you think?
the issuers of stable coins, they're like the main crypto firms, including Binance, right? Which
Yeah,
had a lot of accusations of fraud
problems.
and so on. So
Well, he's out there partying again.
yeah, he's been pardoned, right? So
Yeah, yeah. I think was it a Chinese curse? May you live in interesting times.
here we are.
Yeah. So, uh, let me ask you this, Pedro. We're wrapping up the year here. We're only about 6 weeks away. Um, the biggest development that you think could impact financial markets and the economy, is it going to be what the Fed does or doesn't do in December? Or is there anything else that you're paying attention to? Maybe something out of Europe or something out of Asia. We have new political leadership in Japan, and people are thinking the yen is going to go to US dollar yen to 200 because of her stimulative policies that she's been talking about. Um, can that happen in Japan, or should we be looking to be contrarian? Because I don't think the Trump administration would like continued and further depreciation of U.S. dollar yen or depreciation of dollar yen.
Yeah, I think so. I have no particular, there's nothing particular in Japan that makes me think that they can't engineer stronger growth at this point. It does seem like they're on the cusp of a turnaround. So, but that's
Okay.
something that I say as someone who's watching it from very far away. And I would honestly, Dale, we have been kind of detached from the world in a weird way. And what happens in the US kind of stays in the US. And I do think that the main driver of markets will be the Fed, not the Fed decision in December, but I think
Going
who
forward. The
the
new
appointment,
Fed.
really, the appointment
Yeah.
of the next chair, and I think what kind of changes happen around that. I think that's the main thing that I'm watching, but that's my own insular granular view as a Fed watcher.
Who's your best guess for landing the job?
So it's definitely one of the two Kevins. And my guess is actually Kevin Warsh, because I think that having spoken to people in the markets, I think that Hassett maybe has gone a step too far in the direction of like working for Trump, and therefore there's like an actual risk that his appointment would lead to some kind of bond vigilante concern or rebellion in terms
Mhm.
of loss of Fed independence, whereas Warsh, I think, can claim a greater level of distance from the president and therefore might have a stronger chance. Also, uh, just in terms of his placement in history and where the way he speaks, his general demeanor, I think he just
He fits
strikes
in.
me as more of a Fed chair type than Hassett, but I might be
Okay.
proven wrong. But I think it'll be one of
We're
the
all,
two.
yeah, we're,
Chris Waller would make a fantastic Fed chair, and it's it's great to see him in the mix for finalists because he is super experienced. He knows every facet of Fed policy, but he's, I think, too much of an insider to reform the institution as much as the administration would like it to be reformed. It's hard to say like, oh yeah, we've been doing everything wrong, guys, so we need to start fresh when you've been working there for 35 years.
is it true that Paul's going to come work at MNI?
We're definitely going to have him on our advisory board. We have two former Fed of FOMC members in our advisory board, actually. So
Cool. Yeah. I wonder what he's got to write a book, but I wonder what's next for him.
I
Um,
think he wants I think he's tired, but I think he wants to relax. I think Powell is like a pretty happy-go-lucky guy. Like he
yeah.
plays the guitar. He like,
Oh, okay.
he's a
So,
deadhead. He likes enjoying life. I think this job was like more than he,
yeah,
not
bargained
I
for.
he no yeah it was he knew it was going to be a big job, right? But I don't know if he knew how long he was going to serve and the intensity of his second term. I don't think he could have predicted. So
Yeah. Anyway, uh, got to admire the guy, how he stood up to the pressure all this time. And whether, he made mistakes or not, to err is human, even if you're at the Fed.
It's true.
So,
He's definitely come out looking strong and as a defender of the institution.
all right. And you're a defender of all of us people out here being in tune with what retail people that mainly would be only available to the institutional crowd. And I think that's a great benefit of you coming here and sharing what you're thinking about every quarter. I really appreciate it, Pedro, because most of the other guys are doing it from secondhand. You're out there digging. You go to these meetings. You're like a gumshoe detective that you're there on the ground checking things out, and not just from the comfort of your office. So
That's for sure.
yeah, I really thank you for being part of F.A.C.E for the last I don't know how many years. What's your best guess? How many years have we been?
I think it's been 5 or 6, maybe since
That's
around
great.
COVID. Yeah.
Okay. Well, I'm glad our paths crossed, and
It's my pleasure, Dale.
looking forward to talking to you again next year, Pedro. And it's always I always learn something every time we talk to each other. So everyone, go to MNI to check this out. A lot of this stuff only institutional guys would get their hands on it to hear it, and this can keep an open mind. Plenty of excellent content on MNI, especially Pedro. And that's a wrap. So don't just count your Fed cuts, your money supply, your gold bullion that you should have hedged. Count your blessings, and we'll see everyone again Monday. Thank you once again, Pedro. Follow Pedro on X at P DaCosta, and everyone have a great weekend. Thank you, buddy.
Thank you so much, Dale. It's always a pleasure.
All right. See you next year, bro.
Absolutely. Happy New Year. Happy holidays.
Same to you,
We'll be in
Pedro.
touch.
All right, buddy. So,
Thank you.
everyone, have a nice weekend. Adios. You're welcome, everyone. Sailor will be getting on a boat. He's going to have to be a sailor to get off the grid.